So we had a pretty big eyebrow-raising comment from Sam Altman of OpenAI recently. He recently said that OpenAI will spend trillions of dollars on data centers in the coming years. He mentioned right here that you should expect OpenAI to spend trillions of dollars on data center construction in the not very distant future. According to a Verge reporter, he told a room full of people recently. So what I'm going to do is look at, all right, well, what types of stocks could benefit from this? What are some of the main companies that are publicly traded that could get a big part of this business for not only just OpenAI, but the other companies they are competing with? Think Google, Meta, and some of these other companies that are going to also have to invest billions or trillions of dollars in data center infrastructure to keep up with the demand of AI. So one would be Equinix. Equinix has a price of $776. They're up 0.98% today. Year to date, they're down almost 18%, not looking that good. Down 6.45% in the past year and not too much in the past 5 years. So you're not really getting much growth here, unfortunately. But if you look at their dividend yield, it's probably seen more as a retirement stock or a stock that you are just collecting a little bit of an income from, that you're not really expecting a lot of growth. You're just trying to collect dividends. They specialize in internet connectivity and co-location centers, also referred to as carrier hotels, and they converted to a real estate investment trust in January 2015. So basically, they are a major global data center REIT. They have 260 facilities across 33 countries, and they provide the physical network infrastructure and co-location services often used by AI and cloud providers. So although they haven't seen much growth in the last few years, maybe that could change. They may have another bull run here, who knows? Or you might just want to keep them as maybe a lower risk option and collect dividends from something that could factor into AI infrastructure. Next, we have Digital Realty Trust Inc. So they are down 6.59% year to date. They are up 10.89% in the past year, but only up 6.97% in the past 5 years. This is another one that's a higher dividend, low growth stock, but might be a safer option if you're not necessarily concerned about high growth. But with this company, they're a real estate investment trust that owns, operates, and invests in carrier-neutral data centers across the world. So they offer data center co-location and interconnection services. So basically a direct competitor to a company like Equinix. So they are another data center REIT with over 300 facilities in more than 25 countries that you could possibly look to invest in if you were interested in AI and data center infrastructure stocks. Now we have a company that I actually I mentioned a little bit recently when I talked about my video where I was going over my different investments and how I'm beating the S&P 500. Vertiv is one that I have in my holdings. I believe that long term they could do very well. They have had a dip over the past 5 days and maybe a little over a month, or a little less than a month, I should say. But I do believe, again, long term, that they are positioned very well. If you look at year to date, they're up 7.81%, up 66.7% in the past year, which is really solid, up 701% over the past 5 years. So they've done really well. If you bought them 5 years ago, you are extremely happy. And with this company, they're an American multinational provider of critical infrastructure and service for data centers, communication networks, and commercial and industrial environments. So right up the alley of what we're looking for here. Could be a big part of the future, the infrastructure behind these AI companies. Again, you can invest in NVIDIA and AMD. You can invest in Microsoft. You can invest in Google, Meta, the companies developing AI or the chips for AI, but you also have to think about the infrastructure. They're going to benefit as well, even though they may not be the big name stocks that everybody thinks of when it comes to AI. So with Vertiv, again, they're a critical infrastructure provider offering power, cooling, rack systems, UPS, and thermal management for data centers. So the things that power data centers. Recently secured a soaring AI data center related order backlogs and strong earnings as well. They had really solid earnings year over year for the Q2, beat on EPS and revenue. Again, they're down just because they've had, I guess, so much growth. But if you look at all of the indicators, I'm not going to go fully in depth into an analysis here, but all the indicators I think look really positive for them going forward. Again, I tend to like buying for the long term though. So you also have Super Microcomputer Inc. Now they are down a little bit today, but if you look over, say, the past 6 months, down 28%. Not great, but year to date, still up 41.8%, even though they're in a bit of a dip right now. Down 30% in the past year, but they are up 1,500% in the last 5 years, which is insane. So if you look at this company, they are doing business as Supermicro, an American information technology company based in San Jose, California. They don't really have much of a dividend yield. You are specifically looking for growth with this stock, but again, if you bought them 5 years ago, they weren't doing much for a long time, so that would have been a really bold move to buy them 5 years ago, but it would have really paid off if you held through it. They're a server and hardware specialist. They produce high efficiency, liquid cooled, AI optimized systems. Notably, they supplied half the servers for Elon Musk's xAI project and signed a $20 billion deal supplying GPU rack platforms to Datavault. So Elon Musk xAI, another player in the AI race, had half the servers supplied for them. And again, they are the ones that build these high efficiency liquid cooled systems for AI. Another one you might consider is Micron Technology Inc. Again, they're one that had a pretty big dip today for whatever reason. Over the past 6 months, they're still up 13.6%, up through 34% year to date, up 8.54% in the past year, and up a respectable 174.75% over the past 5 years. PE ratio is fairly low, or at least reasonable. Dividend yield is pretty low, but quarterly financials looked really good. If you look at year-over-year growth in Q2, they beat on EPS 19.75%, beat 5.38% on revenue. So lots of good news for them lately. And they're an American producer of computer memory and computer data storage, including dynamic random access memory, flash memory, and solid state drives. They are also headquartered in Boise, Idaho. So they actually have vital components for AI focused data centers and may be one to consider long term if in fact we get trillions of dollars invested in these types of companies. You might also look into Credo Technology Group Holdings. So they are a company that if you look at the last 6 months, they're up 48.7%. Year to date, they're up 49.43%. Past year, they are up 231.22% and up 847.18% over the past 5 years. Now, their PE ratio is extremely high, but again, a PE ratio is not the end-all, be-all for picking a stock. If you look at their quarterly financials, though, year over year, if you look at Q2, which they had their call in May 2025, they are up around 179% on revenue, 400% plus on net income and diluted EPS, and up 200% plus on net profit margins. So insane results so far year over year for Q2. They are more of a niche but important player in AI server interconnects, specializing in active electrical cables. Holds around 73% of the AEC market and is used by Amazon, Microsoft, and xAI, all of which could end up being major players for AI in the future in different ways. For instance, Microsoft, of course, has a huge deal with OpenAI, one of the first to invest in OpenAI and have like a revenue sharing deal with them. And also xAI, of course, which is Elon Musk's AI platform. So they already have existing deals with some of the biggest players, and they are the ones that specialize in the active electrical cables for these AI servers. Now, last but not least, we have one called Nucor. You may have seen me mention them recently in the video about Warren Buffett and the 4 stocks we just found out he bought this year in 2025. Nucor, they are down 1.64% today, but there's a good chance they will be going up. over the past 6 months, up 2.52%. Past year or year to date, 25%. Past year, pretty much just staying about the same, but over the past 5 years, up 221%. PE ratio is fairly reasonable. Dividend yield is decent, 1.53%. And, they could have been a little better on quarterly financials, but I do believe that that doesn't mean their future doesn't look bright. So they are actually an American company based in North Carolina. They produce steel and related products. They actually are the largest producer in the United States and the largest recycler of scrap in North America. So the largest steel producer in the United States. And of course, the administration for the U.S. government has passed basically 50% tariffs across the board on imported steel. So that benefits them at least for the next 4 years or so, while the Republicans are in power for the United States government. You have the largest producer of American-made steel, and imports are going to be a lot more expensive. So that really helps them have a leg up on the competition. You just had Warren Buffett buy stock in Nucor recently, and as you can see, they actually have something written about this on the Motley Fool. They exited their stake in T-Mobile, and they kind of teased who the artificial intelligence infrastructure stock was. But if you look at it, you might not realize that Nucor is going to be a AI infrastructure stock. You might just think, well, the largest steel producer, we just had the steel tariffs, maybe a good play. But then if you think about, well, they could actually be a company that benefits from all of these trillions of dollars that could possibly be spent on data centers in the future. And they make steel parts for data centers, which are in high demand to power and store all of the necessary data for large language models and AI applications. So they are positioned to support these sectors that are going to all benefit from the massive spending in AI. So those are a few stocks you might consider if you're interested in investing in the future being AI. We all know the future is AI, but it's not just the ones creating the LLMs, the chat GPTs, and the chat-based tools that people are integrating into different types of technology. You have to think about, well, what is actually powering AI in the first place? It's these data centers. Who's building the data centers? Well, these stocks kind of show you some of the best options, and there could be, again, an influx of trillions of dollars into the future. One of the most prominent names in AI just admitted that.